time for Lykken on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Lykken on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of Lykken on Lending, David Lykken.
Let's begin.
Listeners, I'm excited to have the president of Lenders One Co-op joining us, Justin Demola. I've known Justin before he was there. He was one of the members, and I had the privilege of working with him back then. I was a big supporter of him joining or becoming the president of Lenders One, and I'm glad he got the position. And Justin, it's so good to have you here with us.
Hey, David, how are you? Thank you for welcoming me and all the kind words, as usual.
Well, you do a great job. And also joining me is my co-host, Mark Helm, who will be joining me in the interview. Mark, thank you for joining.
Glad to be here, David. Thank you.
Justin, you're a 30-year veteran of the mortgage industry. Mark's 45. I'm in my 50th, starting my 50th year in this industry. We're in some really interesting times, but you've got some real exciting news that we're going to be talking about for your members. And I want to get into this, but before we do, we always give an opportunity for our listeners who may not know you or Lenders One to give a little background on yourself. How did you get to where you're at? And then a little bit, what is Lenders One for those listeners that do not know?
That's a broad question. We could take up the whole time slot right there.
Yeah, that's true. Yeah, it's true. It's so true.
So, yes, I was one of the ones that was born into this industry. My family was in the industry.
Oh, really? Okay.
So it was high school breaks and days off and summers, and it was, you're going to come, work here and play here and understand the business and learn the business. And
wow, I did not know that part of your background.
That continued through college as well. So I didn't have much of a social life to a degree, but it was great.
Mortgage bankers struggle with a social life.
So the irony of this is that I was one of the ones that was probably targeted to the mortgage industry, and leaving college, I was recruited by all the Wall Street firms, both actually on the finance side as well as the marketing side, which is interesting. I had a marketing minor, and my family said, give us a few months, just come work here for a few more months before you decide anything. And,
the old slippery slope, a few months can turn into years.
Yeah. Then I weighed the options of going to Wall Street, working 120 hours a week and getting kicked out to get my MBA for 2 years versus all the money that I was making in the mortgage business. And almost 30 years later, I'm still here. So
we're glad you're here.
I've done everything in the industry, which is pretty cool. So as you mentioned, I was a member, and I own my own company for a while. Then I merged into another company, consulted to banks and credit unions and IMBs as well throughout the process, and was a member of Lenders One and really loved the culture and the organization and what it had to offer its members. And
right.
Admittedly, I was tired of being on the origination side of the business, dealing with all the headache and heartache in times like today, as well as as the good times. But the cycles were getting to me, and figured that this was a great opportunity, not even a great opportunity to jump sides of the fence here and become not so day to day or transactional, which is really allowed me to help our members. And
Lenders One, I think, is the oldest co-op in the nation. It's for the mortgage industry, at least if I recall correctly.
It is, and it's kind of funny, when you look at Lenders One and how it was formed, and the Stern family was the family was in the carpet cooperative business. So if you ever see stores Carpet One, actually there's one about 2 miles from my house, Carpet One, and it was a carpet buying cooperative that had local stores. And
so that's a little history I didn't know either. I've known the Stearns brothers forever.
Yeah, which were independently owned. But they were all branded Carpet One. So fast forward to 2022 and Lenders One. When we start talking about our Walmart initiative, we're branding them Lenders One. So it's
Yeah.
almost coming full circle.
Well,
but
you let the cat out of the bag because that's exactly
Yeah.
why we have you here talking about it. I want to give a shout out to Trisha Magliazzo, who is executive there with you, one of your right-hand people. I love Trish. She's a dear friend, like the sister from another mister. And she's the one that said, you got to get Justin on, ran into me at the conference. The Walmart thing is going really well. So
let me get to finish that second half of your question.
Okay.
Real quickly, Lenders One consists of roughly 250 or so members, give or take. Unfortunately, we are losing a few members now because of M&A as well as a lot of business. But we are 250 members, give or take. We represent 17-ish% of the U.S. mortgage market on the origination side of the business. Our smallest member does under 500 million. Our largest member, in the height of the market, did 60 billion. We're total aggregate between 775 and 800 billion dollars. Last year, obviously it'll be quite lower this year. But our primary mission is to help our members save money, have better execution on their secondary transactions, network, give them some education, and really help them and give them a resource to go to when times are tough like today.
That's really good. And I'm proud to say that we are also vendor members of Lenders One, and it's a real honor. So Justin, under your leadership, you've arranged for a real exciting partnership with Walmart. You hinted about that just a moment ago. Tell us about it.
Yeah. So, one of the things I would say, and we have to be very careful, Walmart is tough on us. So it is not a partnership.
Okay, good. Clarifying that. Thank you.
Yeah. If that gets out, they get tough on us. So let's edit that one out.
All right. So Justin, you have a new business relationship with Walmart. Tell us about it.
Yeah, so it's interesting when we look back at what happened and how it happened. Roughly almost 2 years ago now, a third party reached out to us regarding a request for information that Walmart had for mortgage entities entering their space and taking some space from them. And we went through that process, and at the time, our members were all doing record origination volume, didn't really have any room or bandwidth or capacity, for any additional business relationships such as this. And we went through it, and luckily we came out ahead, and Walmart chose us for this relationship. And you fast forward to today, as the origination volumes are noticeably lower, right?
That's an understatement.
Our members are going, oh wow, this is another opportunity to fill the top of our sales funnel. And realistically, when we look at just the bare bones relationship at its purest form, it's essentially a landlord tenant relationship.
Yeah, it's a landlord. And anyone who's been in a Walmart store, you see these things. When you come through the doors, it's usually you come through the front doors. It's either right or left, but right along that opening front wall of the building, they have a space where they lease out. So again, totally RESPA compliant. It's a pure landlord type situation, but there is a sense that it's in the store. So they are very careful in who they select. And so,
Walmart, so Walmart had some requirements, and then, adding to your RESPA piece, we've done a lot of regulatory, we had third party, attorneys looking at the regulatory environment on this, as well as the branch suitability for licensing on a state and local level, as well as the federal level for HUD, et cetera. So we went through all the legal vetting for the process, and obviously because of the purest relationship that it's landlord tenant, as well as a small licensing agreement, because one of the things that Walmart asked of us was consistent branding, right? They wanted a consumer that walks into a store in New Jersey to have a similar experience as a consumer walking to a store in other parts of the country. So, they wanted consistent branding. They liked that we had the diversification of many different members and strategies, as well as the sheer number of branches and loan officers in the cooperative really gave them a comfort level that, we were going to be here for the long term. Altisource is a great counterparty for anyone as well. So, coming into the relationship, there was a lot of things they liked. And one of them, again, is that they wanted consistent branding. And then they also wanted us, and this is where I think it's really important in terms of the strategy for our members, is they were really really focused on consumer education, credit education, home buying education, and they wanted to help educate their customers about the home buying process. So, and just the credit process in general. So, we were able to offer that. We've actually teamed up with FinLocker on this project. So FinLocker will be the consumer education piece of this, which will allow our members to, help the Walmart customers understand their credit, understand home ownership, and when they're ready, be able to look at their finances and submit the application through to the individual member that has leased the space from us. But when Walmart, one of the value props that Walmart is looking for their customers, again, also is coming back into the store, repeat customers, repeat sales. How can we help them create value for their customers as well as their employees to have them come back into the stores? And if they're going to go for a gallon of milk, are they going to go into go to the local gas station or come to a Walmart to be able to get it? And I think we've solved for that, through some consumer promotions that get people in the store, as well as once they're in process, getting them in the store, and then even post closing, Walmart has payment services that they can come and actually make their payments, within the Walmart store.
A real advantage. Yeah. Mark, good to have you joining here. I'll toss the mic to you.
Yeah, Justin, I vaguely remember, and maybe David could fill in the blanks on this, that Walmart tried some kind of modification of an arrangement like this about 20 years ago. It did not have the structure that you're talking about. It was tried in some regional Walmart stores and whatnot. It was kind of under the same concept, but I think one of the things they probably got burned on was lack of consistency in the branding and all that, and it was kind of a regional thing. So I salute you for what you put together. It sounds like a great program, but the key to the program is the participation of your memberships and what kind of members and what kind of interest they take in what you're doing, and what so far has been the appeal for your members and their willingness to participate in the venture.
So it was interesting when we first started the project. The economics were a little bit richer than we thought they were going to be. And that was a little bit of a deterrent, combined with the fact that there was an overwhelming origination volume. As we've opened these 3 stores, we were able to get the costs down about 40%. The initial startup cost, the build out costs, and the monthly costs is really nominal compared to the number of top of funnel sales leads that we're going to get in, right? So now that we've opened these 3 stores, we're seeing foot traffic come through, and we're seeing different value props that we weren't necessarily expecting. Obviously, we knew we were going to hit a different demographic of consumers, which would help with the potential state level CRA requirements, affordable housing, really, and helping, the goodwill for the community, that the members are located in. So those were the typical value props: top of funnel leads, the ability to see a lot of consumers, some fair housing, fair affordable housing, CRA. But some of the other things that we're seeing, obviously, guess who shops at Walmart? Realtors, right? So now realtors want a bite at this apple as well. So they're building relationships with the members that are in these local stores as well to see how they can potentially do some joint marketing, et cetera. So that's one of the things that we weren't expecting. And then we've been in discussions with a federally insured depository that is actually deficient in some CRA markets. And they're trying to figure out, are there available locations in these potential markets, and how can we work together to be able to get them the volume that they need, so we can help them with their CRA examinations and audits.
Well, that sounds great. I would assume in that vendor relationship that could span everything from homeowner warranties, the termite inspectors, to God knows what. I mean, it would bring all kind of people into play there, and that's the thing. But I think looking at what you've done, I really feel like one of the greatest services you do. If you look at the footprint of Walmart stores in this country, you're going to be in so many places where there's not any choice of mortgage footprint there at all. And sometimes no. I mean, I go through Walmart stores over here where I have a home in Alabama, and there's not a lender operating in that town. Maybe the bank but no mortgage lender, no mortgage company like we traditionally do. So that's really going to be a service to the community. And I agree 100% with you on the CRA aspect of it. It's certainly a different demographic.
And one of the things that, we allow the members to choose their locations, but we give them some guidance. And you're right, the Walmart, that's the center of the community where people are going for their food shopping and for their everyday activities, or getting there, multiple times a month. I think there's going to be more successful than, a Walmart potentially in Miami, right? It's when you look at it, site selection will be important. We have the ability to go into any Walmart location that does not have a current financial institution in it and has a vacancy. So, as you can imagine, the list of available locations is rather large, and we have the opportunity to get in as many as we can get into.
When you look at this as an opportunity for your members, kind of cover that. I'm going to re-ask that question. I look at how it's written here, and I'm asking it slightly different here. So I'm trying to figure out how to do this. The opportunity seems obvious on the surface when you start looking at it. An opportunity to pick up new markets, opportunity to pick up, CRA, all the things you've already talked about. But what are some of the lender members that you're within the Lenders One co-op telling you that they're realizing for benefits already? And I know you just started this, or what are you selling them or telling them they should realize as benefits?
So, the first and foremost thing is, they're going to be only as good as the salespeople and loan officers that they put in those locations.
Absolutely. Yeah.
Right. So it's hard for us to make any type of guarantees in terms of pull-through, right? We're going to see some that are going to outperform and some that are going to underperform. But our goal is to homogenize the process and really have them working together so we can get as much pull-through and success for the program as possible. So, when we talk to them, it's just a sheer numbers game, right? If they're going to do direct mail, right, this is a lot less expensive than direct mail. Direct mail is expensive. You have to do it multiple times. So, when we look at the average Walmart store, you're looking at, 2 million, 2.5 million individual transactions on an annualized basis. You can do the math on how many customers that really is and what that would cost you in direct mail. What I will tell you is, the economic outlay on this is a fraction of what direct mail would be with the face-to-face component of it, the loyal Walmart consumer. So the goal when I look at it for our members, obviously, is close loans, but ultimately, how do they fill the top of their sales funnel so they can put them into their CRM and they can market them on a regular basis? Now, we know the Walmart customer may not be mortgage ready today, but we think that 6-12 months down the road, the numbers are going to substantially improve as people are getting mindset to think about buying a home and working with the loan officers. So that's really what the value that we're putting there. And again, if you're looking at any branch, it's a plug and play process, right? We do it all. We project manage it. We build it out. Basically, it's bring your computers and have a grand opening and get your loan officers there, and we'll do all the rest. So, if you're a typical brick and mortar, type of entity, and obviously we know what the industry is doing right now, so people are going to be trying to pull back on some of these. But even then, this is a relatively inexpensive way to fill the top of your funnels and get where people are, right? Ultimately, you want to get where potential borrowers are. And I don't think there's a better opportunity in the country right now.
Yeah, especially when you look at the CRA component, some of the market opportunities are going there, but yeah, it's very interesting. Mark?
Well, I think this next question might be somewhat redundant. It basically wanted you to talk about unique characteristics, the customer base, which you see as an opportunity. I think we've done that to some degree, and you could add to it. But I got a couple add-on questions for this session. I think it might be good for our audience to, if you got some you can talk about, what kind of benefits can be added to the program you're doing that would be maybe we haven't heard of or thought about that would be RESPA compliant that could really help a customer out. And number two, is there a drive with the Lender One members to hire and train local loan officers to fit this program to reach into the community that they live in themselves? Because a lot of times it's I think of the example in rural Alabama. It's a lot easier to sell a termite policy to somebody that's in your town than having somebody drive in from Huntsville, Alabama to Decatur, Alabama to sell it, because they don't live in that community, so that's kind of a long-winded question, but if you can kind of talk about that a bit, I appreciate it.
We'll start with the second half of that question, right? We encourage our members to choose locations where they have appropriate staffing.
Okay.
Number one, because everyone wants to do business with people that they like and that are similar to them, right?
Yeah.
So, we're also telling our members not to wear suits, just polo shirts, and be the Walmart customer as much as you can, fit in, and don't be intimidating to approach. So that's one thing. And then on the side note is, there's a lot of recruiting opportunity here as well, right? Loan officers are looking for the ability to get in front of potential borrowers. This will help recruiting, especially in areas where they may not normally be. So that you're 100% right. That's what we're trying to do. We're not telling a New Jersey lender or Texas lender to go open something in Utah, right? That's not the plan right now. Unless they have such success and they're going to recruit and fill it and staff it just for that branch. So that's the second half of your question. The first half is, we decided when we were starting this, let's take it slow. We have the ability to offer other type of financing, whether it's student loans, auto loans, things like that, personal loans. But we really just want to start with mortgages day one. Right. And I think that's number one. And then as we see the success of the program, we can then go into other types of ancillary homeownership services to sell to homeowners or home buyers. So, ultimately, when you look at RESPA basically says you can give a borrower anything, right? Because it's the borrower. So, depending on how it works, and obviously we'll be RESPA compliant. That's the most important thing. We're very conservative as an organization, especially being publicly traded. So, we have a lot of eyes on us at all times. So, we are very conservative. We will do what we can do within the scope of the law. But the most important thing is that, we want to create value for our members. We want to create value for potential homeowners and home buyers at Walmart. Any way we can, and whatever product and or service we can offer to these people, we will do that as long as there's a need and we can do it better than someone else.
Yeah, sounds great.
Yeah, when you look at the in-store branch impact on the community, what are you anticipating it to be?
Good question, right? We are in a pilot. Obviously, we want to help the people in homes, right? The American dream is homeownership. So that is our goal. We will count the number of families and track the number of families that we put in homes that may or may not have been in the home buying mindset. And that's our members' mission, right? To close as many transactions as possible for people in homes that make sense for them, that they can afford, that they can maintain and sustain over the long term.
Makes sense. Mark?
Justin, just a question. My whole career has been a major part of customer service in the mortgage industry, and I've done a lot of consulting on that. And David will tell you my background in psychology has played into that. So I'm gonna ask the question here that maybe some people wouldn't think about. But when you set something up like this, you're dealing with a different culture and basically the mortgage industry has dealt with for decades. Okay. So the question I would have, do you have any plans to work with your members once you get enough size that it makes sense to mystery shop these locations and making sure the culture's coming through that you want to put into these stores for the participants in that area? Because I think that could be very important to direct track on stores and whatnot. And I tie that in because we're really interested in knowing about where your first locations are this fall and areas as much as you can share, because I'm fascinated with what you're doing. I think this is going to be one of the biggest things in our mortgage industry. I really do. So I salute you for your efforts. And I know it took a lot of efforts to get this done, especially with a major corporation.
Oh, I love the enthusiasm. So thank you. Ultimately, this is going to morph into what it's going to morph into, right? And obviously we want it to be successful, and the bigger it gets, the more controls and consistency we're going to want throughout the organization and the locations, and we will have the ability to mystery shop, survey, because that's important to us, right? And I think when we get to scale, we'll know who's performing the way we want them to perform, and those who are not. And when we track it, really we're not tracking a lot of data points in terms of touches, but we're tracking enough that we can see what a pull-through ratio is. We can see what the number of closings are, et cetera. And then we'll probably go back and figure out, we got to be careful with data transfer, because we can't really survey customers that aren't our customers for privacy and GLB. So there's things that we're going to have to do and work on together. And then, in terms of mystery shopping, it's not too hard to send someone into a location and say, hey, can you help me? My credit this, et cetera, and see what the experience is. However, it is subjective to a degree, right? Like, it's not like I can call up and say, hey, what rate could I have today? If for those people who do the rate tables, whether it's bank rate or whatever, and you submit rates and you're advertising rates and you get mystery shopped, and someone says, oh, I can give you 8% today, but wait, you advertise 6%, it becomes a little subjective, and you got to be really careful on mystery shopping when you don't have data to compare to or metrics to compare.
Yeah, got you. Well, I'm looking forward to you coming back a number of months down the road and giving us a report on this. It's going to be exciting. I think that's going to be in your wheelhouse to tell you when you're ready, because I know you're going to have some hurdles to do, but I'm real excited about it. And I think it's one of the most important things that I've seen happen in the industry in many, many decades. And so I salute you for your effort. It does take a lot of effort, a lot more than people think it does. And I'm really hyped up about this. You can probably tell.
Yeah, no, listen, I love the enthusiasm. So thank you for the kind words. For me, it was a win that we were able to get this across the finish line between legal, compliance, engineering, building, all the moving parts of the two organizations, and getting them through the process and across the finish line. To me, it's a great win. We've actually had a few good wins this year. In 2022, we started our credit reporting agency. We also launched our loan automation. So 3 big wins this year, setting us up for the future, which is really exciting. And I'm happy just to get things across the finish line and make them successful as we go. And now we have to find some more stuff to create and build.
Yeah. What is the process to participate in this venture? And what kind of outlook do you see moving forward?
Yeah, so the process is pretty simple, right? You're a member. Talk to your salesperson, and your salesperson will connect you with our project manager internally. Look at the available locations that you're looking for, what counties you're looking for, see what's available. Then you go for a site visit. Then we have to present to Walmart's essentially credit committee to make sure that the site is available, that we can put a space in there. There's no one else that they're talking to. We get approval. Obviously, you get the legal agreements done, building permits, and start to build out. So it's a pretty straightforward process. We've definitely streamlined it. We have the right people in place now to make sure that we can get through very quickly, probably within 90 days, depending on the time of year. Right now I can't do anything in a Walmart until after the first week of January for the holiday season. So, there's things that we are dependent upon, and we get through them and go from there. So it's pretty easy to get going.
What do you anticipate the outlook from as far as the number of stores you're hoping to open in the first year? The type of volume that you anticipate coming from this? Any projections you could share with us?
Yeah, so we're going to be pretty vague on purpose with this, right? We are
especially in this market. I mean, this market
we are currently in pilot.
Where are those 3 locations? Where are those 3 locations?
So we have 2 in New Jersey and one in Florida, and one in Florida. Okay. And what I will tell you is, there's high expectations to open a lot of locations. Our members now have the opportunity to go sit in an office for a day with a live store and see what kind of traffic comes through and what the interactions are. But we're still finding our way right now, right? It's oh my God, we're here. What do we do now? And, the first location, I think, had 4 applications the first week. We'll just leave it at that.
How many applications?
4 applications the first week was our first location.
Wow, that's encouraging. Yeah.
Yeah, I don't know if they've closed, but I do know they were credit qualified and they had a property. So, that was roughly 5 weeks ago, 6 weeks ago. So we'll see what the metrics turn out to be. I think the sample size is way too small right now. But again, we have a lot of interest, a lot of members. I have numerous calls with members over the coming weeks to discuss with them open locations, what it looks like, what it feels like, how we can get them into locations. And then I have people who aren't members that are calling us and want to talk about it as well. So big, small, all different shapes and sizes. It's really it's a fun conversation for me right now.
Yeah, I would be. What is the term of the lease? Is the lease in a lender one's name, or is it in the lender or partnership there? A couple of starting to get a little bit into the weeds here.
Yeah,
but...
you're getting in the weeds.
Yeah.
So again, we have
a consultant coming out of me. I got to get details.
We have a master lease with Walmart.
The master lease. Okay.
And then we do a sublease with our members.
Okay.
So that's the way it works. Sublease and a license.
If they want to learn more, first of all, become members of Lenders One. But other than the obvious, that is obvious. What do they need to do to get participating? So what are the steps?
Well, if they're a current member, reach out to your regional director. They will connect you with either myself or our project manager, Benji, to discuss the program. If you are a prospective member, reach out to Tricia Migliazzo or me, and we can connect you with your local regional director and start the process about the membership conversation.
Good. This is excellent. Like Mark said, this is a very exciting opportunity for anyone who is looking to a way to expand their production operation. And, I'm really intrigued with the CRA component, which Mark talked about, because that is something that's crept into our industry as independent mortgage bankers. We got to pay attention to that CRA thing. And I think this presents some real opportunities for that. Justin, thanks so much for being here with us. Really appreciate it.
Thank you for
Really
having
enjoyed
me.
it, Justin. Thank you.
Yeah,
All
Mark.
right. Thank you both. I truly appreciate the opportunity as always.
Good. Yeah, we've had as our guest listeners, Justin Demola, who is the Lender One Cooperative president, and the one who has pulled off a real exciting opportunity for lender members of the co-op, Lenders One. Again, Justin, thank you. Have a great week and talk to you soon.
Thanks. Bye-bye.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.